Hi guys, and welcome to our fourth video today, in which we discuss the correlation between a gap up or a gap down, the volumes that are basically the engine behind the move of the gap, assuming there are volumes or excess volumes, the intraday trend, and how we as day traders take advantage of all this scenario where a stock is either very weak or very strong, has a clear intraday trend, either up or down, and is also volatile because of the volumes or excess volume. So let's see what we have here. A candidate that I found on the list from yesterday. If you remember, actually nobody remembers, but let's point to the list. Yesterday the markets, like I said, closed weaker. The S&P down 0.84, the Nasdaq down 0.91. So we have plenty of red names here. One of them is SMR, NuScale Power. You can trust me on that I never heard about this stock before. Maybe traded it, I just don't remember. So the data is as follows: down nearly more than 7.5%. 15 million shares of volume. That's amazing. Range percentage way above average. So we ask about 5%. This one is 13%. What happened here? We can go to Yahoo Finance and read about it. No need. Okay, so let's look at the chart and believe our eyes. Okay. So what's wrong with this chart first? Okay, a lot. First of all, the stock gaps up. So if you're looking for a short play, this is not it. Then it comes back to the zero number, meaning it's not showing on any of the screeners. So if the stock is not on any screener, how would you heard about or look even at SMR, assuming it's not on your watch list? And why would it be on your watch list? Okay, so it's not on the watch list. It gapped up and closed the gap, and then it continues to move higher, and until pretty much 10:30, 11, you think this is a long play. Then something happens, and it's not like it is backed by any increased volume or anything like that. I mean, do you see any increased volume on the move lower? I don't see. But I do see here a stock that started to move lower basically at around 11 and did it for 5 hours. That's major. So that's something that we love to trade. Okay, to be on board with this move from above 43 to 39. That's a 10% intraday move. Now, what is the reality of this trade? How can you enter this trade? How can you even watch SMR? Because it's none of your business looking at stocks that are around the zero line. Now, if you look at the amazing chart here, that's shameful because I cannot make a case for trading this one. Take a look at this perfect triangle breakdown that triggered under 43.80. I think 43.80. Let me just make a point here. So it wasn't even a round number. Yeah, 42.80. The risk was wow, 40, almost $1. So a lot of risk. $1 in this case is more than 2% to get $5. Not $3. 3 to 1. Unclear pattern, especially in the morning. So when do you observe this stock? I'm guessing most of the traders would have seen this one either here at 41 or most likely at 40, which is again not very extended because it hits 40 before 1 p.m. and still delivers another dollar lower to the lows of 39 on the day. Have to say that this is one tricky stock, and we don't see very often this type of occurrences where the stock gaps up then closes the gap. Then it's not moving lower, it's moving higher, and then after an hour of trading, maybe a little bit more, it starts to unwind and trades lower for 5 hours or 4.5 hours. That's something that so it fits some of the criteria. So intraday trend, good for 5 hours, amazing. The ability to profit is there, but the prerequisites of finding these stocks are not there. So the prerequisites are a gap, in this case a gap down, but the stock is gapping up. So where's the good correlation here? We don't have it. Now excess volume, do we have excess volume? Let's take a look at the daily chart. Not even excess. I cannot say that it has excess volume. So the answer is no. No volume, no trend. Yes to no volume, no gap, and great intraday trend, but the ability to take profits is, I think, limited here, because not because you cannot enter the trade, the liquidity is good enough to enter this trade, but because you don't see it. It doesn't appear on your screens unless you are watching it or knows anything about this stock, or it's a kind of obscure stock out of so many. I have to say shame on it for being so not very, let's call it this way, not presented itself. The stock did not present itself the right way. It was very, very obscure and kind of misled or potentially misled traders. So the gap up is definitely misleading. Then the reversal up may bring in some traders long, and it ends up way lower. So again, an example where things are supposed to be working, guess what, they're not. Okay, so we have enough time for another example. Let's take a look finally at one that did deliver. This is ADMA, down 7%. Let's ignore the $18 or $20 price tag and look finally at the stock that's starting with a gap down, not a big one, but started with a gap down, then attempts in the first minute to close the gap, and then starts moving lower, and every step or every level is being executed as a short play. Let's start with the 20 with a very tight risk, then the next level 20 cents below, then this bear flag formation, and another level at 1920, and basically it goes down for almost let's call it the morning session from 10 until 1 nearly 2 p.m. and then reverses somewhat late in the day, but that's not an area where you want to even look for a trade anymore in this stock, or most likely. So I don't think there are it did deliver a nice reversal, but this is not a place where a day trader will wait I don't know 5 hours or 5.5 hours to go long on ADMA, unless you see something spectacular in this stock. Now again, we said we are looking for criteria. We have a gap down, yes. We have a trend all day, yes. We have the excess volumes. I'm not sure about that, but keep in mind this is not the earnings season, so you cannot get everything. But what you do have here is clear entry points on the downside, and in this case the 1% risk, and this is a $20 stock, so 20 cents of risk is 1%. I think you have like 3 or 4 quality entries where you can risk 1%, and it easily covers. So it delivers eventually here more than 5 to 1, more than $1 to the downside from the beginning of the move. But that's not something that you know up front. But you know what you do know up front is that you have that 1% or less than 1% type of risk, and here you can hold on to your horses until very late in the day. This is actually the perfect scenario where the stock nearly closes at the lows of the day, and if you are, if you observe it, the question is again, where do you observe it? I assume observing it at, let's call it at this level. This is like 1950. In this case, the risk here is like 10 cents. If you of course observe it in that 1980, it makes a 50% difference in profitability, or 40% difference in profitability of this trade. But let's say 1950, it's a round number, it's carries 10 cents of risk, and actually it works to perfection. This is the type of trades that I wish we can find more on a daily basis, but again, those trades are available to us, and the question is how you can reach them. And you can reach them by, first of all, searching for them. That's super important, either with a screener, either with a top 20, either with a gainers losers list, depends on your broker. So you need to screen all the time. In this case, the market was also moving lower, so it would make sense to screen actually for short plays, not for long plays. I'm taking into account that this stock was shortable, and again, there are so many brokers, maybe it wasn't shortable at one of them, but there are no guarantees ever. But most likely I'm looking at the volumes, and I see no reason why this stock is not shortable. It's not subject to any shorting rule or anything, so not too shabby, and it proves that working a $20 stock, if you use the 5-and-1 risk reward strategy in terms of percentages, risk no more than 1%, thrive to reach 5. This one reached 5, almost didn't reach it, but eventually reached 5%. And again, what we love about these type of patterns, that they give us time to think. You are in the money all the time, almost all the time, and you can easily move your stop loss to the entry and maybe add to your position if this is your strategy. So I think out of the 4 stocks that we analyzed today, this one fit the bill. Not 100%, because there was an issue with a small gap, not a huge gap. Obviously there are no earnings, obviously nobody is watching Adma Biology or whatever. Yeah, so if you have any questions or remarks, please post them, and I will answer them. Also guys, remember, if you want to participate in our Sunday seminar between 1 and 3 p.m. you need to sign up for that. Just email us. We'll gladly have you in the seminar. It's limited to 10 people. Thanks a lot, and we'll see you in our next video, which is coming up in about an hour and a half, the open today, and of course we're going to have the coverage of the FOMC meeting at 2 p.m. starting at 2 p.m. until 2:15. Maybe we'll do another video between 2:15 and 2:30. Thanks a lot guys for being here with us. Please share this video with your friends, and we'll see you in our next one before the market opens.